morning, everybody, and welcome to your third FOMC of the 8 FOMC meetings we have this year. You have your FOMC prep that was sent out to you yesterday, so have a great day, enjoy your morning, and I will see you all actively in the chat room come 1 o'clock. Between now and 1 o'clock in the afternoon East Coast time, do whatever the hell you want to do. Here's a look at futures and that massive pop from Besant talking about a China deal and China discussions are on their way or whatever the fucking hell he said. Futures have faded it off. And I shared with you a link over there in the chat room to go and do some studying back on the Donald Trump Twitter archives back to when he was president before. It's all fluff. It's all bullshit. And what will take place is as we get closer to election season is when you will start to see real discussions that will occur. Not many people can remember back to what happened last presidency of Donald Trump, how it was all a big fucking charade. So anyway, futures have faded off fractionally. What we had on that pop, we're still green. And that's pretty significant, pretty important, because we had, not that it's that significant anymore, but after those 9 green closes in a row, we got our red close there on Monday, which was kabang, kabang, perfect play. And then yesterday with the gap down, pretty aggressive gap down. Take note that we closed above the open, and we have 2 red closes in a row. Like I said, not significant, but that's what we have going into the FOMC meeting today. One other thing I'd like to point out, which I was glancing over and just having a mental notation about, talking about how we have 3 red months in a row. The month of February, February 28th, the month of February closed down 0.25% for the month. Obviously, March minus 5.97%. But then, April closed down 0.51%. Remember, it made me look like an idiot because I was calling for a green month and I missed it by 16 points or some shit like that. 0.51% we closed on April. So 3 red months in a row, but 2 of those months aren't even down 1%. And again, we hit minus 20% from the all-time highs after, 600 plus trading sessions. We went into the year with 556 without a minus 20%, 295 without a minus 10%. We got both of those. But we spent 23 minutes total in bear market territory, minus 20%. So whatever, I'm just basically going over to let you know that we closed red on the month, which is a tiny little notification of a warning. That's all that it is, because what I have followed quite often with this market is once you have lost that green monthly candle, you tend to get a little bit more aggressive to the downside. But again, because of the futures big bounce, big pop off of Besant after the market close, 56.55 being the monthly candle, that's where we're pretty much holding right now. Today being FOMC meeting, like I shared you on the weekend, I shared you yesterday, you can, limit your expectations because there's 1 out of 7 are going to give you a pretty aggressive move that is unbelievable. And you've also got to keep in mind all of this December, January, December, February, all of this 2023, 2024, we had a 14-15 VIX. So playing the single legs like we have, that was the reason why you got to go 75 cents to $124 in December on that big move. But we got a 20 plus VIX. So playing your single leg calls and puts, they're not going to give you the I'm not saying they're not going to give you, but the ease, the simplicity of getting that 500,000, 2,000% trade in the final 90 minutes of today, it's not going to be like it had been traditionally because you have that very high VIX. So anyway, that's what I've got for you on there. Obviously, yesterday was pretty cool. A lot of risk on the 5640, 5645s. The minus 1% alarm. Boom, we opened right there at minus 1%. Still, like I said from the email, 55.9735 is in focus. We got our little bottom there. Boom, minus 1% is official. And what did you get off of that? You got your plus 1% bounce, 56.41. We went up to 56.45. My job is done. This is why I do what I do. And anyway, boom, it was a lot of fun. It was cool. So let's move on because what we have moving in to today, and I need to notify, I'm just going to make it simple here. Boom, minus 1%. So what we have moving into today is very, very, again, with the QQQ, 2 red closes in a row, 2 consecutive closes above the open. So the bulls are still here, and the bulls are still what we are trying to push for. Same thing on the IWM. 2 minus 1% days, and 2 closes above the open. So still giving the bulls the preferred view. Not taking that off the table. The only thing being that because our new moon window has closed, and we are going to start beginning at the end of this week, beginning of next week, heading into the big full moon together with CPI, which is going to be coming out on May 13th. Caution to the upside. Be very, very cautious about your upside because, like I shared with you yesterday, a simple, tiny, little minus 5% dip would be very healthy for this plus 17.9% bounce. So leave you off with this, bring you on to the SPX. Got a couple of things to look over for you here and update you or remind you. Once again, 5638. Just showing you how going back almost a year, actually more than a year, going back to July 2020, going back almost a year. July 2024 when we made it up here. Problem. Coming down in this dip in March. Problem. Boom. Bottom. Full moon. March top. 57.86. Roughly where Donald Trump's presidency is. 57.83. Again, problem on that dip to the downside in the beginning of April. Tariffs come out. Bam. We're right back here. 56.38.73. So be very, very cautious about your upside view, regardless of the wider view perspective that we still have. Bringing you on to a detailed view of what we have, once again, coming off of that 48.35 and that 23-minute visit down below minus 20%, we very easily could have an ABC wave right here, right to 57.47.93, if everything was perfect, because we haven't touched the 200-day moving average yet. Very well could. We could also be looking at ourselves with the 1-2, which is the preferred view. And here we have produced a first wave, 1, second wave, 2, and we are in the beginning process of the big wave 3. With this being the first wave of wave 3 that's been completed as we went up to that 5,700. This being an ABC move to the downside where we very possibly, as we are floating above the big 50-day moving average that we gapped up above, possibly flirting with the bullish wave 2 of the big wave 3. And should this produce, the big wave 3 of wave 3 is the strongest of all the strongest waves that are out there. So that one, poof, to the moon, Alice. That would be your big one. And just to bring you back, we are still, I are still. I'm still very respectable of this Fibonacci spiral. And how this Fibonacci spiral has been virtually dead accurate on this projection to the times and dates. May 19th being the 89th day after February 19th, the 5-year anniversary of COVID, where we topped at 61.47. We are looking May 19th that a high would be produced. Does not mean a new all-time high, a push higher. Simply means that we get a pivot. Is all that it is. So that is still there on the table. But my preferred is that we get a dip to get that bigger move to the upside, but we'll see how that all works out. So again, bring you back onto these charts, and I will finish you off with Apple, just in case. Again, with my detailed view that I use, your big gap over the 50-day moving average, that took place back here at the very beginning of May. Got a perfect head and shoulders here. Perfect head and shoulders. Perfect. Rip this bitch apart. Bam! Take us down to that 54. What is this? 54.33. Be virtually perfect for a minus 5% dip. Give you a big flat. And then start progressing and looking at that 57.50. That would be nice. That would be very, very nice. I don't think Jerome Powell can do it, but that would be very nice. Again, here with the new moon, having the two pivots that we have down here, still, for me, I cannot place the new moon is in. Can't do it yet, only because haven't seen any movement, which, nobody's seen any movement. QQQ. Perfect tag over there. Perfect tag. Last week, Friday. 200-day moving average. Literally to the penny. Perfect tag. And here we are with a little bit of a fade off of that big 487. 487 being plus 20% last year from the open. From the open of 2024, that is your plus 20% move right there at 487. But again, where we're sitting, not really producing any kind of aggressiveness other than what can be seen visually as a perfect head and shoulders. So what do we got? Well, still looks, again, with QQQ and the SPX being the two indexes that have filled the April 2 tariff gap. Could very easily be that we have an ABC perfect boom boom. Could very easily be that we have our 1 and 2. Here we have produced our first wave, our second wave. Now we're in the very beginning stages, very much like the SPX, of our big, big, big bullish wave 3 of wave 3, with this having been the wave 1 of wave 3, our pop-up there. Don't want to be editing that, want to be duplicating that to bring it down here, because this would be then our wave 2 of wave 3. Again, we do not know. So this is what we're still looking at. And then you come over onto DIA, which has not filled the tariff gap. And I remember going back last week where I said, yep, I'm looking to buy the blah, blah, May 9th DIA 407 calls, but I'm not buying them yet. I'm waiting for a dip. We got that dip there on Wednesday, and I was too busy with everything going on, so I did not get 407 calls for April 9th or May 9th. Would have been a damn good trade had I gotten it, because there we are, like exactly what I wanted to see up here in the 400s, but we still have not gotten to that 420, still have not filled that April 2 tariff gap up above 421. IWM a little bit better, a little bit, almost filled the gap, 202.66. But here you have a couple of days where you're getting up into the 200s and you're fading off of the 200s. However, you're now pushing, a little bit more than 2 weeks, April 23, where you're bringing back your bear market 195.98 line, and you're fighting it for resistance. Now we're fighting it on support. And just below there, here you got your big 23.6 retracement to the 2009 lows and the all-time highs right at 195.25. So I would be very cautious about being bearish on the IWM. I would also be very cautious about understanding that getting up above 200, it's been a bit of a problem. So that's what you have with that. I will bring you onto your VIX so that you understand again why going back here to Thursday of last week, Thursday, Friday, Monday, Tuesday, we got nothing. We got nothing. We got nothing. We got nothing. We've been trolling this 2371, snaking it up and down. Still got gaps to be filled. 2102 has never ever been seen. So the bears, or I wouldn't say the bears, the bearish opportunity is still on the table. And Jerome Powell comes out at 2 o'clock. So from there, you get your chance. But like I said, because you have a very inflated VIX up here in the 24s, we're not down in the 14s and 15s like we traditionally were for the better part of 2 years. So single leg calls, single leg puts, end of the day on SPX for the FOMC, they are not going to be cheap, not like they traditionally have been. So I will leave you off quickly with Apple and the email I sent out to you yesterday. Where's the email? The email is right here. 32 trade setup, Apple major support trend line. Boom, 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 boom. I am not a trend line guy, but I have enormous respect for them when they are drawn to the penny and accurately on the minute the pivot actually occurred. That trend line and gave you the pivots is your end of 2022 sell-off low and your April of last year, 2024, 195.34 low. There you can see it right there. Boom, boom. Your April 195 coming right there. Am I right? No, that's your April low right here. April low, 164. But what I put out here is the daily is showing you that you're also very near getting oversold. And your setup, which preferred attack, would be doing a PCS, a put credit spread, more so than any kind of single leg calls, only because it's very clear to see there is, number one, is a very aggressive bearish push down on Apple. Number two, that where do they make iPhones? And what's the number one topic out there? Well, there you go. You know, it's fucking iPhones, China. But you're right back here at this 195. And as you can see over here in June, which I would assume is an earnings move, 195 was resistance. Bam. Came down in your August sell-off, 195.34. 195 is what you've been snaking other than your obviously aggressive dip to the downside here in April. And you're holding right here on that 195. So that's where your trend line is coming from. And that's where your trend line is sitting right here. Oh, that's the VIX. That's not the Apple. That's where your trend line is sitting right there. And when you zoom yourself out, which again, you remove the accuracy of these trend lines when you start changing time frames. More so, best used if you draw it perfectly, put it on the 1 minute chart, you'll see the trend line picture perfect. However, here you go. You know, things are not looking too rosy, and I see that there is a gap that has not been filled, just fractionally there below. So I like that being a very nice place to be aggressive about a 195, 192.50 put credit spread. Get yourself $1, get yourself $1.50. But again, you know, this is Apple and it's subject to everything that's going on. And as you can see with Apple, it ain't shy about heading to the downside in this correction that we have. But again, with it being a 1, 2, 3, it does look very clean as if this correction is over for Apple. And now it's all about trying to get some good news so it can push back into that 212, into the 220s, and restabilize itself up above 220. So FOMC, 2 o'clock. See you in the chat room, 1 o'clock. Do whatever you want to do all day, but don't try and do any trades unless you know what the hell you're doing.